The network you've built in San Francisco is truly amazing. And at 23 years old, you also became a junior partner at 7BC Venture Capital, an established global fund. Miron, welcome to the podcast.
No, thanks so much, Joe. You're too kind. Thanks so much for having me.
Let's go back to the start of journey. What was your first real exposure to venture capital? Was it when you kind of had your banking internship in college?
I was fortunate enough to take a venture capital course when I was in college, and I think that was my first technical exposure. I've heard of it before, just through friends of mine. Friends who talk about buy side, VC is always just a subset of private equity, and a lot of my friends said, you should actually look into venture just because of how much I love the numbers and investments, but the emphasis on people and relationships, and that was my first entree to it. Then when I took the first course, it was fantastic. At that moment, I knew I wanted to be a VC. From there, I was in banking when I was in college. When I came to SF, I worked at a premier fund of funds. We were investing across all asset classes, private equity, private credit, hedge funds, and a lot of my exposure and coverage was actually venture. Granted, that's on the fund of fund side, but it was great to see more VC funds, see their allocation strategies, see their theses, see some of their portfolio companies. And being in the Valley, I was able to go to different events, talk to people that are actually doing it, the startup founders that are just crushing it. And it really just sparked a new fire under me. So I always knew I wanted to do it for years. And then seeing it firsthand really got me a great entree into it. And then I didn't technically break into venture until I started Qualtic Venture. So that was one of those things where, if it's not going to happen, just do it yourself. And then it all got started from there.
Yeah, and when you really started, not only did you learn like the foundation fundamentals, but you also got like that hands-on experience dealing with people in the industry. So you really knew that you actually wanted to do this. From this starting point all the way to your journey right now as, a junior partner, could you kind of talk about that journey?
Yeah, I think that's a really good question. As I said, right, careers in finance, went over to the fund and fund side, and then went over to Qualtic. The biggest emphasis of the journey is how much people have helped me continue forward and move on. That I think is a big magic to what the Valley does in general, right? A lot of my friends in New York, they say it's a bit different over there. Networks can be a bit more guarded. Not saying you can't do either on any coast, but the West Coast has a bit more of this kumbaya mentality where individuals are a bit more open to sharing networks with individuals that are younger, more curious. And I feel so fortunate for that. So although I had relatively well technical experience and I understood the space very well, I really just went in running around to different events here from SF all the way down to Palo Alto, meeting VCs, startup founders, people that are just passionate about the community and getting their thoughts, insights. They would intro me to different individuals and building up from there. So that was a big part of it. I think in terms of actual work wise, working at that fund of funds is great exposure to just various asset classes. Knowing from there that venture is really the one that I truly do want to pursue, that allowed me to go ahead and start Qualtic Ventures. And when I did that, it forced me to go ahead and get deal flow. It was really important for me to figure out, okay, if I want to be a VC, I want to know all of it. I didn't want to start off as just an analyst at a large fund where I'm maybe only having limited coverage or I'm only doing outbound outreach to founders or whatever my responsibilities may be. I wanted to figure out fundraising. I wanted to figure out due diligence. I wanted to figure out deal flow, the legal docs, right? You name it, I wanted to do it. And that was a really big propelling reason of why I started what I started. Um, Fantastic experience. From there, we became oversubscribed on our deals. Our portfolio companies ended up doing stuff with Disney, eBay, Paramount, Vizio, Balmain. On the fintech side, I brought in MasterCard. We did FIS and NCR. And I had no business doing it. I was 22 years old, ran around the valley. I didn't know anybody at the time. And it was just such a fortunate experience. And then my second company was a capital raise business. I pretty much looked at the market and I said, okay, how can I provide the best value to founders, especially if I'm on the VC side? I'm not a technical guy. I'm not going to dive in on C++ and figure out your product, your code, but I know how to scale a company. And most of these companies, they die because they run out of runway. They just can't fundraise anymore. So fantastic founders that are 10 times more intelligent than I'll ever be, great products, fantastic teams, but they just fail to fundraise. I figured out fundraising is a game, something that I was relatively good at, and hence my second company sprouted out where I can advise startups doing that and also bring together a network that I've been building of VCs, family offices, and different allocators in the space. And again, very fortunate. We did seven figures on our first 6 months, went worldwide. We were in four different countries. I ended up selling that company. And then I came over to the investing side at 7BC.
Yeah, and it sounds like what you want to do, you really just like dive straight into it. You don't say like, hey, maybe I'm just gonna do this one thing, and maybe this thing is like a usual exit for something else, and then let me just do that thing. But then no, you're like, I want to do this. It doesn't matter if I don't really have experience. Like you said, when you kind of started the syndicate, it was like you didn't have like any connections directly to it, and you really just like hustled and build it off of your own. And then even like now and through all your companies and stuff like that, you're trying to stay humble and say that you don't have that much technical expertise and all that expertise, but you really built that solid network. You really built those solid skills that really just translate to like all the roles that you had. I know that you definitely talked about how you were really deciding like, was VC actually for me? So for our audience, who is VC not for?
That's a fantastic question. I'll address one of the previous things you said just about speed and execution and moving quickly. I think that's so important, particularly when you're young. If you're in your 20s, earlier than that, 30s included, you know what, just at any time, I think speed is of utmost importance. And I always say, shoot for the moon, you'll hit a star. And a lot of me, when I had Qualtic, and even now to this day, I still run with this amount of confidence where I can go ahead and do this and do it quickly. Because even if you're listening to this and you say, I want to start a syndicate, I want to learn about venture, just going to one event is better than not going at all. Trying to start a syndicate or a fund of your own might seem like a daunting task or a large task. And even if it doesn't go well, you've now learned more about the space. You learn more about the legal aspects of it, the deal side of things. You've probably taken your hand at sourcing some deals, and you're better today than you were yesterday when you started. So if you can just do that quickly, there's never going to be a perfect time. And I know it's a cliche thing to say, but it's true. So just get started today and learn about something, and you're better than you were yesterday, and that'll compound over time. So speed and being able to learn fast and getting exposure is really everything, at least to me. Question of who is VC not for, I think, is a fantastic question. I think a lot of individuals who don't know the space exceptionally well view venture as maybe a sexy asset class, as something that's really fun to do. And I completely agree. I'm biased. To me, it's the coolest job in the world. I think it's fantastic, and I couldn't imagine myself at this point in my life doing anything but. Being said, if you're in it for the money, I think you're in it for all the wrong reasons. To be honest, I think you make more money as a founder if you do it well. There are jobs in banking that you can do much better at. Even if you go to the buy side, later stage private equity, you're making higher base salaries, bigger bonuses, there's larger funds, and your carry, if you have some, will probably maybe will lead to a bit more. And also keep in mind, venture is a long term play. I think you really have to love it. Early stage venture, if you're investing at the pre-seed, seed, Series A levels, you're looking at 10-year fund lives. And in today's market, that's changing. Funds are amending to 11 years, 12, 13, maybe sometimes even more. And that is a long time to make some real money. If you're just making your base salary and bonus off of your management fee, you're not gonna be balling on your yachts every single day. The carry is really where the money is, and it takes a while. So for those that venture is not for, I would say the ones that want to make fast cash, it's not for you. The second is if you're really just in it for the money because you feel there's a lot that's going to come from it, it's also not for you because you need to build a personal brand. And that's how you'll have trust with founders. That's how deal flow is going to come your way. I think you need to be curious about the technology that's happening today, especially if you're going to be an early stage venture. You need to be on the forefront of what's going on, not just of, I'll use the analogy of this hockey puck, of not just where the puck is today, but where the puck is going. Can you see that? Can you support founders? And a lot of it's a partnership and relationship business with people. So if that's not yourself, where you don't love to connect with individuals, you want to make fast money, you're probably better off doing something else.
Yeah, and I completely agree. It's like even in venture, the more junior roles, it's like people stay there for a couple years and then they go join like a startup or even do their own.
Right.
So it's like venture is really a way of life where you are just like building that network
Mhm.
for your future self in a way. But at the same time, it's like uh, your day to day is kind of just like meeting founders.
One thing I'll add to this point is venture as a whole. If you look at the history of it, maybe take the previous 50 years in Silicon Valley, you're usually looking at individuals that are later in their career. You're looking at individuals that are 40, 50, 60 years old that have already built these networks, have done incredible things, have sold their companies, etc. Year over year now, you're seeing more people earlier in their careers break into venture, which is a great thing. And I'm a huge advocate that you don't need to be 40, 50, 60 to do well. You just need to be young, hungry, and you just need to be hungry, ambitious, and want to be well connected and interesting and really passionate about what's going on. Being said, um, you can only do it well if you love it, and the exit options are limited, is what I'm trying to say. If you do banking, for example, you can do virtually anything you want to do. In venture, as Joe, you mentioned really well, the exit options are really join another fund, join a startup, maybe go do biz dev or start your own fund. It's not you can go do anything you want to do because the skill set to be in venture and while you're in it is so drastically different than almost anything else. So keep that in mind, especially if you're in your 20s or looking to get an venture earlier, that you should probably want to do it for the long haul. And if you go and break in now, it's fine. You can always do it when you're 30 or 40 or 50 or more.
Yeah, and like Miran says, it's like usually it's like the people in their 40s and 50s, but the difference between like the young people these days, like Miran, like this dude has like literally done like stuff that people in their 60s, 80s can't even do. So you've built a company, you've joined like funds, you've done like a bunch of investment roles, and you've just like done a syndicate, which all of these stuff, it's like you wouldn't really expect it from someone who's in his like 20s. So it's just like, it's a thing where if you actually hustled enough, it doesn't matter your age. It really just matters like what have you done in the past? Like what have you contributed to your community and your society? And can you bring that deal flow or can you bring like the capital? So talking about what is a day in your life or like a week in your life?
It's a great question. It's one that I find a hard time answering because it varies, right? There's really no day to day, particularly when you're at a when you wear a lot of hats at your firm. There's not every day, no day is the exact same, which is something that I love. If someone likes structure with your role and whatnot, venture maybe not be for you. But if I had to break it down at a very high level, I'd say majority of my days, my mornings start off in meetings. That could be portfolio companies of ours, currently in our portfolio. So those CEOs, it could be investors if I'm raising capital from LPs. It could be new companies that we're looking at that are in our pipeline that we're in diligence with and speaking with those founders. It could just be one-off partnership calls on something else. So it's usually meetings from that end. I like to take my afternoons and focus on email or diligence and just catch up on things that I haven't been able to do before. From there, I'll jump back into one-off meetings. It's a very meeting-heavy role, I'd say. Coffee chats as well. You're in person, you'd be on Zoom, you name it. From there, I take a break. I usually go to the gym. I'll come back, and then you're usually going to some event if you want to be active. And it could be a startup event, VC one, both, the more, you name it. I'll typically come back from those around, say, 8, 9 p.m. And then I'm on the desk with emails, diligence, supporting portfolio companies, you name it. So for myself, I think it's definitely not a 9 to 5 role, and you have to love it. But I feel like I get to do it. It's not something I have to do. It's the thing I'm most passionate about in life, and that's how my days are pretty split up. I'd say it's meetings, one-on-one focus, and then events are pretty much the main things.
Yeah, and like you said, earlier, you have to really put yourself out there and create that brand. But not only that, but to really maintain that brand as well. So you have to go to events. But other than that, it's like you're always meeting people, founders, calls, like constant calls. It's like if you were an introvert, you would literally be drained. But you have to really love people and you have to love their ideas. But at the same time, you have to say no to them. For like 95% of the founders. So when you're really selecting people, it's just like really, really hard and you gotta take a really, really good look at it. Um, I know that you mentioned going to events. What would you say is like the two most common way to find yourself into the best events?
Into the greatest events,
Mhm.
I think I may still be trying to figure that out myself. A lot of it, to be completely honest, you end up getting a feel for it once you've been to a few. And once you build some friends at some of these events, they'll invite you to other ones that maybe aren't exceptionally public, if you will. They're not going to be on Eventbrite. They maybe won't be on Luma's public pages. And those tend to be a bit more higher quality. So it really just depends on your network and who's sending you those events. But I honestly would say, especially if I'm starting off my career, I wouldn't shy away to only spend my time on what I consider to be high quality events. Reality is, you just don't know what a high quality event is yet. Number one. Number two, you never know who you're going to meet. I've been to some events that some may consider low quality, but I made some of my greatest contacts at those events. You just never know. And the thing is, you don't need to go the entire time. Even if you have an hour or 30 minutes or whatnot, I encourage going. You shake hands with one person, it could change your life. Even myself, I think everyone who knows me knows I'm exceptionally extroverted individual. I'll say hi to everyone in the room. We'll walk in. By the time I leave, like four people are best friends of mine. You know what I mean? But I remember I've been to places where I walked in, I'm just not feeling it. I didn't even want to go. And I said, you know what? I'm just going to talk to one or two people. And I've done that and then just walked out and left. And that's provided to be fruitful. Even if I didn't meet anyone that was quote unquote doing something with me now or useful in a way, it was great to learn their story and I've made a new relationship and I can support them in some way, which is fantastic.
Yeah, and it's like, Mira says, you never know who you're gonna meet. But at the same time, it's like even in like the smallest events, or you could be going to the gym, if you just like announce what you're looking for, if you say like, hey, I'm looking for a VC role, you never know what that other person might know. So it's like you never know who a person might know. And if you really just like announce to the world, like, here's what I'm building, here's what I'm doing, here's what I want. And, the world will really just like kind of reciprocate in a way where the people would point you in the right direction rather than if you just like kind of stay quiet about it and no one would really know. And like Mira says, these events, they could be some of them could be maybe you're not feeling it and others you could be loving it, but at the end of the day it's really you have to stay consistent about building your brand where you just have to put yourself out there and hey, maybe this event you don't feel really good. That's fine. At least you went and that consistency builds momentum and that momentum builds connections. So on the question of building networks and how do you maintain relationships with these founders, these really great founders, or even like LPs?
Yeah, I want to touch on the piece of the momentum you said because it's very true. No matter where you are, you could be in the valley, which I'd recommend if you want to be in venture. It's still the mecca. The mecca of venture is still Silicon Valley. But you could be in New York, you could be in Austin, Texas, LA, you name it. A lot of these events going on, if you go to enough, you'll start seeing the same people come around and come around. So even if it's a time where you're not feeling it, as Joe was saying, you might even just go hang out with your friend again and you see them just one more time. This isn't your best friend that you're seeing all the time to go out and get dinner and whatnot, but you've just seen them one more time. So the next time they see you, they're happier to see you. And it's more comfortable for you to actually be there. And then you get invited to more events and they'll tell you about more exclusive deal flow or whatever the case may be. So just having that consistency also allows you to find familiarity and new friends. And you can start going to events together and whatnot. I did that for a long period of time where a few individuals and I got together. We met at some events, and next thing you know, we only started going to events together, and that just made it even easier. Especially if you're not feeling it, if you're introverted or whatnot, it's a great way to just get comfortable, get out of your shell, and meet some more people. So that's big.
How do you maintain relationships with high net worth people and the best of founders?
Yeah, that's the key one. I think there's no great way that I've found, and there personally, I actually don't think there is a perfect way to do it. Especially if you're meeting individuals all the time. When you do have a large network you're building, even if you're building a company, you're a founder, you're busy. You're not really going to maintain a great relationship with people because you can't call 300 people every single month. It doesn't make sense. People aren't going to remember the amount of times that you talk to them as much or the things that you say, but they will remember how you make them feel. So when you're with them, it's showing them that you do care. It's showing them that you do remember those little pieces and those moments of their life. And it feels like it's quality and it feels like it's genuine because it should be. That I think is how you maintain stuff. There's individuals I don't talk to for 6 months, individuals I talk to once a year, but we still speak so highly of one another. If I bring them up to someone else, it's highly spoken on both ends. When we do catch up, it's like nothing, we didn't lose a beat. That's great. The next thing I'd say, which a friend of mine taught me, is a lot of times you think about your friends or your contacts or some individual. You'll never send the message, but it takes 2 minutes to send them a text. You think about your friend Samantha, for example, and you just pull out your phone in that second, 2 seconds, say, "Hey, was just thinking about you. Hope all is well. Wanted to say hi." That's it. That helps a lot. But just remember, it's about the quality of the time that you spend with the individual. Focus on how you can help others. Focus on what they're doing today. Show a genuine interest, and they're going to remember how you made them feel in that moment, and you were supportive as you should be if you do care, and that goes a very very long way. Next thing you know, as you build this, you can call someone a year from now, where you haven't spoken in 12 months, and they'll be pleased to hear from you, and you can catch up, and you can bring up little notes and talk about their birthday or grease and everything else, and you can have a solid business relationship as well that way.
Yeah, and it sounds like what Miron is saying is that it doesn't really matter how long ago it has been, but it does matter if that conversation that you guys had is very quality, is very value added, and once you guys meet again, that is the most important part where you have these notes and you still remember these like little things about them. That is not necessarily about like their work life, but more about their personal life where that is where you can truly make a connection with them.
Sorry, one more thing I'll say is if you can provide value in some way, people aren't going to forget that, right? I meet an individual one time or two times, and they're working on X, Y, Z, and I said, you know what? I'd love to introduce you to my friend. They're doing this, or I'd love to introduce you to this investor, or this it could be a partner of yours. You name it. If you just do that without asking for anything in return, the individual will remember that. Especially if that person starts working with whoever you introduced, subconsciously they know you made that intro. And the next time you go to them a year from now or whatever, people will never forget how you made them feel and how you supported them in that moment, no matter how big or small that individual is. So those are always huge. Just provide value and support wherever you can. Could be the smallest thing. Even myself, my first job, I was a shoe salesman at Cole Haan. I was 16 years old. And I wouldn't really call myself well networked, right? I'm just working at Cole Haan selling shoes. But I was in high school, and I used to tell my friends and say, "Hey, you want a job at Cole Haan? I'll talk to the manager." You know what I mean? So just try to be more of that person. At least it's how I operate in my life. I don't know if it's right or wrong. It could completely crash and burn, but I love to at least introduce and connect people all the time.
Yeah, and you've really built this, name for yourself in Silicon Valley, the Wonder Kind, where it's like you said, when you start going to these events, you see like the same people again and again and again, and it sounds like you really built a relationship like with the broad generation of people, where it's like now you have a name for yourself. Could you talk about how you can kind of build that for our audience?
That's kind of you, Joe. Thanks so much. Yeah, the came as a shocker to me as well. The wonderkind of Silicon Valley, how that came about. There's an individual by the name of Dave Lambert. He's the founder and managing partner of RSCM. Right Side Capital Management, for those that don't know, is one of arguably the most active fund in the world outside of accelerators like Y Combinator, Techstars, etc. What I mean by active is just how many times they've deployed, right? They have well over 2,000 portfolio companies now, which is just ridiculous. That's a huge number. Outside of an accelerator, traditional fund, over 2,000 portfolio companies. So RSCM is an exceptional fund, and Dave is an even better individual. He's fantastic. This was maybe March of 2024, where we're catching up in his office here in San Francisco, Dave and I. One of the partners walk in. I go to introduce myself, and he goes, "Oh, wait a second. You're Mehron." And I go, "Oh my God." I was like, "Okay, here we go." And I said, "Yeah, yeah, what's up? It's such a pleasure to meet you." And he goes, "No, no, no. I know all about you. Dave talks about you all the time. He calls you the wonderkind of Silicon Valley." And I was like, "Oh my God, that's great." But I had to keep it cool, right? I was like, "Yeah, of course. That makes sense." I didn't even know what the word meant, to be honest. I thought he was saying Wonder Kid. I had to look it up afterwards. It's a German thing, WUNDERKIND, Wonderkind, AKA stands for the prodigy, or however you want to call it about. But that was just such an incredible experience that when I was so fortunate and so lucky to get coined onto it in general, but especially from an exceptional individual like Dave. And what I talk about now is the nickname has nothing to do with selling a company for $1 billion or raising $1 billion, right? It just has to do with genuine connection, which to me feels remarkable because it makes me feel like I can make a real difference and a lot of people's lives. The wonderkind of Silicon Valley just stands for being curious in others, loving the game, loving helping others in any way I possibly can. And it's just about being genuine and people feeling that genuine self. That's all it is. That's the spectacular part of it. It's nothing that crazy, but to be known as have a name like that for something like a relationships is pretty exceptional. And I feel honored to have it, which is great. But again, it
And
doesn't have to do with changing technology or raising a bunch of money or making a lot of money. It just has to do with being in with people.
yeah, the key point here is this nickname came from Mehron's way of building relationships. Even if you did a company, you founded like $1 billion company, you might not even get a nickname. But even if you do, it could be for some other work that you did. But Mehron got this by building relationships. The guy who coined the term, David, how did you make such a genuine connection with him? Like, what was the story?
You know, Dave and I have a really cool story. That the first time him and I met was almost a year ago today. Not a year ago, actually. It was February. I believe it was February. It might have been February of 2024. And especially when you're young, I think I still do this to this day, even with the thank God the network that I have now or the knowledge or you name it, I still use my youth to my advantage all the time. Where individuals with more experience than myself, I ask them questions all the time, about the history of venture, their portfolio companies, or their experiences. People love to talk about themselves, and they also love to help. And when I first was introduced to Dave, we share a portfolio company of ours, Aiden Technologies. They're a cybersecurity company doing very well, in my opinion. I'm a big fan. The CEO, Josh, is an exceptional individual as well. And Aiden was hosting something during RSA, which is the cybersecurity conference happening in San Francisco. So Dave and I meet there, and we're both co-investors in this deal, Aiden. And we just start talking about venture, and I'm asking him questions more so from an advice perspective because of all the things that he's accomplished and everything that he's seen. And he just has a great personality. He's outgoing, he's caring, etc. Next thing you know, I'm not gonna say the name of the company, but Dave starts giving me a story about Silicon Valley. And this guy has over 2,000 portfolio companies, right? And he has even more, thousands more companies that he's passed on. He starts telling me some crazy story as a huge learning experience about this fintech company. And as he goes on and on and on, he's maybe 60 to 90 seconds in. I go, wait a second. Is the founder this guy? And is this the name of the company? And he goes, how did you possibly know that? And it just so happens when I was running Qualtic Ventures, that deal was one of the few deals we worked on at Qualtic, where I know the founder personally, and we almost invested in that deal. So Qualtic Ventures was actually almost a co-investor with RSCM on that exact same deal. And he was like, oh my God, what a small world. That really broke the ice in a lot of ways for us. And then more than just business, we talk a lot about travel. And we talk about Dubai. My family lives over in Dubai. We talk about the Middle East. My family has a good history there. We talk about his travels to places in Asia. And I'm a huge fan of travel history around the world and whatnot. So it was more so bonding on a personal level than we had that cool thing where we both, for some reason, I knew it was that one company. My knowledge and venture at the time is quite limited. I don't know a billion portfolio companies. So that was really cool. And we've just built from there. It became a friendship thing. And we hung out for hours that night, just talking about life, his stories, you name it. And it was just strictly a friendship type of a situation. And from there, Dave saw the way I was connecting with others, not only at that event, but also at various places, and he's heard the reputation started building a little bit, and other people were talking about me, and Dave was talking about me as well. And it built from there. And you just had this random kid that was 23 years old running around the valley building a name for himself, but doing it in a way where people can feel like it wasn't transactional whatsoever. This guy genuinely cares about what's going on and wants to help founders the best he can and connect VCs with everyone he knows. And people really felt that care, and I think people felt special, and it was refreshing in some sort of a way. I think they realized that. Put it this way, I just spoke about this an hour ago with a friend of mine. A lot of individuals say they're coming from a relationship perspective, and at the end of the day, so much is just a relationship game, not just venture, but mostly in life. But subconsciously, deal makers will always have this agenda of, are they going to invest in my fund? Am I going to invest in their company? Can I use some of their contacts? And that's a bit natural in high performing environments like Silicon Valley, New York, and more. But myself, I tried my very best to put that on the back burner with almost everyone that I met. And just make it. At the end of the day, we're just people. And, we can be friends and do great stuff. Part of it also is my youth. I feel so fortunate to be doing things at this age where I know that hopefully I have many more years ahead of me to continue moving forward. I don't need to strike a deal right now. What I can do is learn from them right now. What I can do is open up my networks right now and just be friends. That I've found has actually opened up even more doors for business than I possibly could have imagined. But I take the pressure off where I feel like we don't need to do a deal right now. I'd rather just know this person. And on top of that, what I really love doing, instead of thinking that how I can work with this person myself with my fund or one of my portfolio companies, I think of what's the best way I can provide value to them to somebody else. And if it's another VC friend of mine, I make that intro every single time. I've done it with investors as well, which I think is the biggest. People might say that the no or all these VCs, their most guarded possessions are their LPs. They won't share their investors, right? I understand, it makes sense. But when I meet an investor that says wants to deploy $250,000, $500,000, if they love biotech investing, for example, I don't do biotech investments on my fund, right? No, it's not. We're not focused on it. Maybe I'll have an SPV. Maybe we have one portfolio company that has something relatively close, and I might spin up an SPV and we do something, or I tell them, I maybe start pitching them, you know what, like biotech is difficult. You're actually better off with our strategy. You make better returns. If they love biotech and that's what they want to do, I'll send it over to a friend of mine and be like, hey, XYZ is looking to deploy 500,000 and I want it to go into your fund. Or I know someone that does real estate. All I'm saying is I'm happy to share my network all the time. And people love the authenticity of that, where they feel Mehron is really looking out for my best interest because it's true. I genuinely want others to do well around me. I don't need to do well myself as part of a deal with them. Now that we're friends, I just want to see them do well. And internally, it's helped me do well as well. It comes back around at some points. But I think those are just key things to remember.
Yeah, and many people they don't understand that this is true networking where it's just you making friends. That's what networking is. It's like even if you're in like a higher position, it doesn't change. It never changes. There's always gonna be someone in a higher position. There's always gonna be people who looks up to you and you gotta respect them as well because they have potential and they're gonna grow as well. And just like Miron, maybe fate has brought him together with Dave, but then at the end of the day, what really happened was his genuine and authenticity that really just like brought them even closer. And could you talk just a bit about like how you and Dave maintain the relationship to this day? Like, what do you guys do?
That's a very good question. It's not. Some people may think that Dave coined this nickname onto Mehron and it's caught fire in the valley and Mehron and Dave probably talk once a week. It's just not the case. Dave and I do talk maybe once every few months, and he's an exceptionally busy individual, and I myself, my schedule can get backed. And to be honest, I could do a better job of reaching out to Dave to just catch up. Um, the nature of our relationship is we might be doing some similar sort of event, excuse me, or there's a portfolio company that I want to talk to him about. I want to get his thoughts about something adventure, but Dave has really become a mentor to me, and it's the quality of those conversations, right? It's not the quantity, it's just the quality. So the nature of our relationship today is here and there. We might send a message or an email back, but it doesn't happen that often, nor does it need to happen that often, which is the most important thing. One more thing I'll say is just know your stuff, especially if you're younger, anyone at any age. A lot of luck is involved. A fair amount of luck is involved in almost everyone's success story, right? I'm not saying I'm successful by any means, just relative success. But there was luck involved in mine. But a story like meeting a Dave or like 7VC and Andrew was our GP taking a chance and bringing me on didn't just come from me sitting around and next thing you know, I get a message in my inbox, come be a VC. It's when we did meet. What a lot of people don't realize is I spent the better part of 2 years, almost every single night, reading something about venture and private equity, learning something about venture private equity. It could have been a podcast. It could have been an article. It could have been a blog post, a Reddit, Wall Street Oasis, you name it. I don't even need to finish that podcast. I don't need to finish that book. Nothing. It's just something new. And when you do that, I did that almost every single night before I went to bed. That coupled with the course that I took and people I was speaking with, I knew my stuff cold. I knew more about portfolio construction or what's going on in today's markets than maybe some VCs that are earlier on in their career. So when I did speak with individuals, it wasn't just oh, this kid is asking me questions. I was able to ask the right questions. I was able to make the person I was speaking with think about it, ask ones that would be like, wow, okay, I'm curious now, intellectually stimulate them, and show my intellect, passion, and understanding for the game. And that speaks volumes because you don't need to be of the same age for an individual to respect you. You're going to force them to respect your mind. And good for me, they gave the leeway of saying this guy doesn't have to know everything. Even today, they go, he's 24 years old. He's not going to know it all. There's so much for me to still continuously learn. So I have that leeway. Even in this position or with what I'm doing, it's understanding that he doesn't have to know it all right now. But when you're sharp, people are going to be drawn to that. And if you meet someone who you admire in person, if you can become intellectually curious, speak well with them, maintain a conversation, and know your stuff, they're going to be willing to connect you and help you out again. Now, if you just happen to meet that same person, you knew nothing at all, that person's not going to talk to you and they're not going to connect you with their other friend, their other friend, their other friend, or give you an opportunity. So just be ready for that. And I'm sure everyone's heard that already, where you make your own luck type of a situation. It's very, very, very true.
Yeah, and it's just all about putting yourself in the right environment.
Mhm.
And some people think that all they have to do is just like research a person beforehand, but no, that's not just it. Like think about it, right? If you just go to an event and you meet a random person, you can't research them beforehand. You have to understand like the foundations of the industry, just like have that mind, like Mehron says, have that mindset of keep on learning and staying up with the trends, understanding exactly what the industry is. That way, when luck comes to you, then you can actually maintain that luck. That's the important part. Because obviously, if you meet great people, that's great. But if you don't have a relationship with them afterwards, then literally, what's the point? Like you just wasted your time, you just wasted their time, and their time is probably even more precious because they're great people, they're doing stuff, and they could contribute more to the world if they use their time efficiently. So you should not waste that. I know that you're also like a mentor of tech stars and also an accelerator. Um, could you talk about your mentorship style?
Yeah, a lot of the value that I provide for our portfolio companies of the fund, and as it goes for Alchemist, which is a strong B2B accelerator here in San Francisco, and then Techstars as well, a large accelerator. A lot of my mentorship there just relies on where my expertise is, and that just goes to fundraising, right? It's helping companies raise their next round, structuring that, how to tell the story, speaking with investors, just every piece, preparing it to doing it, and even afterwards. And that's really my value add. So that's a lot of what I do with Alchemist and Techstars. Is just speaking with those portfolio companies as they're getting ready for their demo days and helping them pitch it to investors and share their stories, and even post demo days if they're just raising from outside VCs, then shaping that and having those meetings, answering the questions, and how to really gain interest and capture attention.
Yeah, and it's like you've done everything. Especially, for some reason, like you're great at fundraising, but you're also great at getting deal flow. And that's just not what usually VCs are. They're either, good at one or the other, but you're really good at both of them. Could you talk about like how you were able to start your first syndicate? Because you had like Fortune 500 clients as well. So how were you able to do that? Did you have a mentor? What was that process like?
There's an individual by the name of Eric Verplo. He's fantastic. Eric, we met in December of 2022 at at a VC holiday party event, and I was infatuated by Eric's story. He's an OG in Silicon Valley. He's done incredible things, and he was MD at Deutsche Telekom Partners. I think he was MD at Verizon Ventures as well. And yeah, the quant hedge fund, his own VC, and he's just a really great guy, and knows the history of Silicon Valley because he lived it for quite some time. So I said, hey, I would love to talk, and he said, okay, come down to Menlo Park. So I took the train. I was in the city, and that's where we met. went to the train down in Menlo Park for this 30 to 40-minute coffee chat, which ended up being 2 hours long. And it was fantastic. Eric asked me about my story and what I want to do with my life. And I said, I want to have a fun. And this is kind of my idea. I had this whole vision. And without me saying anything, he goes, Mehron, I see a lot of my younger self in you, and I'm inspired by the things that you're saying. Whenever you start your own fund, I will happily be on your board of advisors. And I said, you have to be kidding me. I mean, that is exceptional. And he goes, man, why don't you start a fund now? I go, what are you talking about? And he goes, do a syndicate. How am I supposed to do that, Eric? I just turned 22 3 weeks ago. I don't know where to start. He goes, I've done 12 of them. I'll help you out. And I go, really? From there, I was working in high finance, and that was a Sunday. I went back to the office on Monday, was working a late night, and me and my analyst class, we were grabbing dinner at the office. They said, how did it go with Eric? Right? And I said, it went really well. I'm starting a fund. And immediately they said, we'll back you. Right? We'll support you in this and that. I said, oh my God. So that built me the confidence. Eric helped me a lot when it came to looking at the deal and analyzing the portfolio companies. And he even shared a few deals my way on the deal flow side. So that was great. In terms of building out and doing both, what you need to understand in venture is take away the tier one VCs, your Sequoias, Andreessens, Bessemer, etc., the exceptionally large AUM players. The majority of venture capital firms are smaller and they run lean teams. And the only way you make money in private equity or venture is just on 2 and 20. 2% management fee, 20 carry. A regular business, if we had a traditional business, let's say we were doing a shipping company, right? You name it, or you're a founder of some B2B SaaS startup. You can do $2 million of ARR this year, and next year do $6 million of ARR. You can just really have a nice growth. You don't do that in venture. You raise a fund, and then 2% of that is your management fee. That's what you're taking for your fund life, which is probably 10 years. So if you want to be a value add to a VC firm, which is really how you get a job there, is do you affect the 2 or do you affect the 20? If you want to partner at a firm, you got to do both. The 2 you can only affect by bringing in more capital. That's raising money from LPs. The 20 you can only affect by bringing in great deals that you invest in and they end up exiting and doing well and you make carry, right? So people that have helped me out along the way was really when I built Qualtic myself and I started building more deal flow. You build that personal brand. You really need to help yourself here. VCs that you meet, if you can provide value to, if you're allocating as well, they'll send you some deal flow, but you got to be friends with them. Not every VC you meet is going to send you deal flow all the time. So that's pretty big. But build your own personal brand and network of founders. And that's how you're going to affect the 20. And you need that. On the 2, that's a longer opportunity. You're not going to be, typically, you're just not going to be in your 20s raising capital like that. And that's the most relationship driven thing there is. These are individuals that are giving you their hard earned cash, that are pulling out of their savings to give you money in a higher risk asset class. And that takes a lot of trust. And that takes a lot of time to build that trust. So those are things to keep in mind. But the ways to, I think the focus should be, if you're looking to break into VCs, have more deal flow. And the best ways to do that is be out at events, know a lot of founders, start introducing them to different VCs that you know, have the VCs send you deal flow they're looking at, make sure they know your mandate, and that's one way to build deal flow. Second one is founders talk all the time. Have them send you deal flow as well. Outbound outreach, that's another way to do it and get your way out there. You're sending messages to founders on LinkedIn and email and whatnot. Go to demo days, that's another way. I mean, there's just so many ways to increase your deal flow, but you want to get to a point where you have a lot of inbound coming in your way. And you're only going to get any VC, you just put VC in your name and you'll get inbound. Believe me, you will. They're going to be garbage deals for the most part, but you'll get some inbound just being a VC at a baseline level. To have good, solid deal flow that's curated takes more time. And that's just with founders knowing you, VCs knowing you, everyone knowing what you're looking for, and being pleasant to work with. I speak with founders sometimes where we don't invest in them. You mentioned earlier, 99% of the time you're saying no. It's true. We say no all the time. But what I found is you don't just need to say no. You can say no, but talk to this person. I'll introduce you to this person. Think about this. You're not going to do that every single time, but even if I let them down in some way, like we're not investing, I can provide some sort of thoughts or insight, or at least I'm not going to be rude about me saying no. It's just not a fit for our firm. When there's a pleasant experience, is all I'm trying to say. People will speak of you in a high manner, and they'll talk about you to their friends, and their friends will reach out to you. So build that personal brand and reputation. There's another way that most people do it, where it's you start posting on LinkedIn and you gain a following on X, or you become a social media person for venture, or you write articles and blogs. That wasn't really my speed, but there's a lot of people that do that and they get deal flow that way as well.
Yeah, and it really sounds like when you kind of started your syndicate, people really just like came together and wanted to support you. But at the same time, you were really coachable where you're like, okay, I'm gonna transition right away. It's like you just got right into it rather than other people who's like, thanks for the help, but like maybe in the future. Well, it's like you have this high agency where you just like wanted to do it and you wanted to do it and you literally just did it right away.
I will say one thing: you need to hustle. I mean, it is not easy to go and get some deal flow. I had nothing when I started. To be honest, I was trying to raise money from investors and friends of mine, and in the back of my head, I said, how am I even going to get a deal?" I wasn't even thinking about getting allocations to the deal. I was like, how am I even going to find it? The valley is full of them, right? But it's just finding the right one that'll take some random 22-year-old syndicate. There's a story I'll share where I I live in this high rise apartment building, and the power went out the night before. There's no running water. The elevators don't work. Nothing. And I the next day have a flight to catch. My phone doesn't work. I have 5% charge the next day because I wasn't able to charge it. There's zero power. I have no power bank. I have a flight, and I go. I don't know how I'm gonna make it to the airport. Can't call an Uber. Nothing. I need to go print my boarding pass at least. So I walk to a nearby hotel. Right. I walk down all these flights of stairs. It's a relatively large building. I walk down all these flights of stairs. I'm just wearing sweatpants and a t-shirt, and I walk to a nearby hotel and I log onto my email and I print out my boarding pass and I start coming back home. As I'm leaving, I notice there's an event going on at the hotel. And I look at the sign and it has something to do with fintechs and startup companies, something regarding startups. And I go, oh my God, I need deal flow for Qualtic. I take the last few percent that I have on my phone and I look up what this event is. And this event is charging, close to $1,000 a person. And it's fintech companies and some other stuff. And Qualtic was focusing on fintech. We did, we did enterprise SaaS, the B2B SaaS, AI, fintech, and AR and VR. But I said, this is a great area. And I understand because I was in financial services and banking before, and I get fintech. I take $1,000 a ticket. I said, there's no way I'm going to pay $1,000. So what did I do? I walked back home, up all the flights of stairs, put on a suit, came all the way back down, went back to the hotel, and snuck in through a side door. I sneak in through a side door, and I walk in with a lot of confidence, and I act like I was supposed to be there. And I started making friends right away, and no one questioned it. I even started telling people I'm not even supposed to be here, and they started laughing because at this point we became somewhat friends. But I ended up getting one of my first deals from that event. So you need to get out there and you need to meet people and you need to hustle for it. It's not just going to come to you.
Yeah, and it's really the initiative. If you have initiative and you have the hustle and the consistency, you really get places. And just like Miron did, he is in places now. Could you talk about a bit about how you landed your key roles in venture? You also got a promotion at 7BC. Could you talk about just the key reasons behind those?
Yeah, I'm the GP of our fund, 7BC. We were Rubicon for funds 1 and 2, rebranded to 7BC for 3 and 4. We've known each other for quite some time. And he's an exceptional individual and he's been tracking my career, and we were friends as well. And when I was having my companies, he'd come to San Francisco for a few things and we'd catch up. And, a period of time, he just wanted to take a chance on me and saw the success I was having. And they were looking for someone to come to lead the investment team in Silicon Valley. Many more years of experience that they're looking from my end. But because of the relationship we've had for years and the success I've had thus far, along with some people that have already met me and have known me, they really just decided to take a chance. And that was the luck involved. There's a few other funds calling me as well, but none with as great of an opportunity of this one. and also the relationship the GP and I have. I actually really wanted to work together for even before he even brought it up. So I try to fight for that a little bit and for him to let me in, and that was it. So I came on to do that, and I was an investment associate here at the firm, leading the deal process, finding deals, sourcing, diligence, you name it. But being at a small firm, you wear a lot of hats. My role became a bit more all encompassing, where I started doing a bit more on strategy, looking at our portfolio companies, you name it, I was touching it. And then the fundraising piece kicked in, and I started bringing in some capital as well from LPs. And that was a big push where that alongside a lot of supporters in the space, to be honest, individuals like Dave Lambert, other individuals whom we really respect at the firm and that are friends of the firm, people that the relationships I've built and the connections I've built here in the Valley, we're all speaking with our GP saying, this kid is their words, they were saying this kid's a real talent and you need to keep him at the firm long term. And we put me on partner track, and as things kept going well, my role kept expanding, it just clicked. And in a way, a lot of people were really advocating for it on my behalf outside of the firm. So it's me, I had a few conversations about it at the firm, but it felt fantastic to have others advocate and see the value that I've brought into the Valley, see the support that everyone else has around it, and how bad I think everyone else really wanted it and really pushed that internally at the firm here. And that, along with high performance, we'll see how things go, they were willing to give me the offer. Then at that point, that I became, now I'm known as one of the youngest partners in the world at an established firm, which is fantastic to say. But I hope great things are to be still to come.
Yeah, and most people don't even like get that far, as in like, you're kind of a year in and you already made so much accomplishments, so much people vouch for you, and that's the best part. Because venture capital is all relationship industry, and if you really have that much people telling, your GPs like, hey, this guy's good, like actually keep him there, then your GP's gonna be like, oh my gosh, I have someone who's so valuable. I need to make sure that they stay in the team and not just like go to another fund or start their own company. Um, could you talk about like the key reasons you land your first fund of funds as well, and also maybe like what you guys are doing at 7BC fund of funds, and your thesis?
Yeah, of course, of course. The Hull Capital Partners is where I started my career post grad. Uh, we had around 50 billion AUM when I joined, and as I mentioned before, investing across all asset classes. I was on the portfolio management side, where we'd work with a PM, portfolio manager, or an MD, managing director, and they'd work with our clients. Clients consisted of mostly family offices, exceptionally uber affluent individuals and whatnot, where we were building out portfolios for them, ranging across all asset classes. At the analyst and associate level, there you're really just analyzing the portfolio, seeing the funds that we're invested in, making sure the performance numbers are accurate, building out different market slides. It's just typical analyst work, right? But that was my exposure to the fund of funds world, and what that can provide. And they have a relatively strong name here in the Valley, which is great. Um, it's not exactly my speed, to be honest. I understand the model, but at 7BC, for example, our primary focus is our VC funds. We're on Fund 4 right now. We focus on late seed and Series A investments into B2B software companies, mostly focused on workflow automation. Excuse me, is the specialty. Usually 1.2 to $6 million of ARR is where we kind of come in. But we've done earlier than that. We've done outside of those scopes as well. The firm, we have a lot of portfolio companies, and we've been relatively generalist. That's still the main focuses. But right now, we're launching a fund of funds as well to support a lot of these initiatives. And we launched another new arm of our business called Global VC Demo Day, and it all comes in the mix. To bring it all together into one, how it operates is we get so much deal flow as it is as 7BC Venture Capital, which being around for quite some time and being a high performing fund for over a decade. And then the reputations, of course. We launched Global VC Demo Day. That it's a demo day for VCs, kind of like how startups have demo days where they come and they present. And they present it's free. They get selected based off of merit. So it's really just the high performers that apply. Unlike some of these other events that charge 10, 20, $30,000 for VCs to come present to a room full of investors, or LPs as we call them. For us, it's free. And we do this all over the world. And then the LPs are vetted: family offices, high net worth, sovereign wealth funds, institutions, you name it. So, right, the VCs come based off of merit. Other VCs can also come and join and meet the LPs, meet the other VCs, and then the LPs are all vetted as well. But we're not a charity, right? So why do we do that? The way we view it, if it's done correctly, our deal flow at the VC fund is a lot. The team runs so lean. And of course, you have great deals coming through the pipeline. But if you do something like this, we're speaking with our friends that are high performing VCs on a month to month basis. And we deal flow share all the time. So they're already curated. So that was great from a deal flow perspective. It's also good for, raising capital and whatnot. And then where the fund of funds kicks in is really our GP has great relationships with some large OG Sanho Road funds, like some of the biggest names that everyone knows. And a lot of the founders of those and the GPs are friends of his. So, a third of the allocation, some will go to allocation into those funds. The other ones will be what we call the OG emerging managers, sub $150 million fund sizes. They've been around for quite some time. We all know each other and they perform well. And then the other third is going into fund one, fund twos, fund threes, or smaller funds, larger funds. So that's kind of the strategy in the fund of funds model there. And we can cherry pick. If our fund of funds invest in a VC fund, for example, and that VC fund has a portfolio company that's doing exceptionally well, we can go ahead and invest in that through our VC funds as well. Or they're not exercising the pro rata rights, we might go ahead and buy it from our VC fund. So all of it kind of works together in a way. The primary business is still the VC fund, fund four, deploying out of that. But Global VC Demo Day and the fund of funds are also just kicking off right now.
Yeah. And for our audience, what a fund of fund is just like Mehron says, it's they're investing in VC funds. So it's like a fund of just a capital that they get from LPs. It could be from really wealthy people like sovereigns. And then they use this capital, and what they do is they really invest in these really high potential and very successful VC funds. So then the money can really just get allocated, and other managers, other VCs can really just like deal with the deal flow because 7BC has way too much deal flow. They also have way too much LPs, and it's just like they have so much connections where it's like now they're just like kind of launching a fund of funds, just to make sure that everyone in the startups industry is getting their share, and it's just supporting the community.
That's a really good way to put it. I'd say it also juices our returns for our LPs. You know what I mean? Like for our VC funds, for example, our fund of funds is great because we're analyzing some of the best performing VC funds that we invest in out of the fund of funds. And those portfolio companies, we can then cherry pick that investment and put it into our own VC fund. So it juices returns that way. And because of the relationships we have with VCs around the world, we can get some really good allocations and some really good funds. So as much as I'd love to say, we're here to support the community and do all this stuff, that can be a part of it and help everybody else raise. But at the end of the day, we want what's best for our investors. And we've been performing exceptionally well for them for over a decade. We want to continue that. And we feel this is the next wave to juice their returns and continue to do exceptionally well. So,
Yeah, could you talk about maybe like top three things that you would to select a VC fund?
let's select the VC fund.
Mm-hmm.
It's highly dependent on your risk tolerance and what you're looking at. It is so. I mean, the first thing to make it really easy, the first thing you're going to look at is track record. If do they have a fund two, or are they on fund two, or are they on fund three? What were those metrics like for VC funds? Really, what you're analyzing, you're looking at TVPI, total value to paid in. You're looking at MOIC, multiple on invested capital, and IRR, and DPI, which is the most important one. Distribution to paid in. Those metrics you look at from the numbers perspective. On top of that, you're going to look at, is the sectors they're investing in good? Are these verticals fine? Do I believe their thesis? Does it make sense? And then the people themselves that are running it, what makes them special? Why do they have better deal flow than somebody else? Why can they support portfolio companies better than anybody else? What makes them a great manager? That is just a high level answer that I can give. It's just so nuanced and depending on the fund and what your allocation strategy is like. But overall, I'd look at previous track record, what makes that GP special, and what are they investing in? Do I believe in that thesis myself? Completely different vehicles. They're completely different funds. So it's like if you invest in our VC fund, that doesn't mean you pay a management fee for the fund of funds. Well, I mean, it's just completely, you can almost think of it as two separate companies. So yeah, the LPs get to decide whether, hey, do I want to invest in the VC fund or do I want to invest in the fund of funds? It's not like you're mixing together different fees from that end.
And on the other side, what is the top three things that you look for in startups?
That's a great question. I can speak on what it's like for the firm. If you're looking, because this podcast is all about breaking into VC, when you get into venture, call it as you can be a scout, or a venture fellow, venture partner. Let's say you're actually full time at a firm. You're gonna find pattern recognition at some point as you see enough deals and figure out what's good and what's not good. Now, I think if you're breaking in a VC or earlier in your career, a lot of what you should see is what's good for your firm. What I mean by that is what's your firm's investment thesis. For example, let's say you have a great deal in hardware, right? Your firm just doesn't do any hardware, but that deal might be exceptional. You probably just shouldn't spend an exceptional amount of time looking at hardware deals, right? You should just find like what's the best startups for the thesis. Of course, VC firms don't want to miss a great deal, so they'll take a bet. But if you're like it's your first deal as an analyst, maybe you don't bring the one that's just completely out of left field. You want to show the firm that I know what's going on and I know what we like. So for us, at least, we like to see deals that have 1.2 million to $6 million of ARR. That filters out a lot of companies. So that's like one thing that I'll see. The second one everyone always talks about is team, right? So that obviously that makes sense. Why it's not necessarily the pedigree, I'd say. It's not that XYZ went to Stanford, went to Harvard. It's why this team is the right team to execute on this business model, on this strategy. What context do they have? What's their why? How are they doing this in a differentiated way? What makes them special? It's not the pedigree, it's the execution and how they can execute. And then of course, if they exited companies in the past, can we do reference checks on that? That's pretty big. The third thing I would say when I'm looking at a startup is the individual themselves. And this is more a personal thing, right? This is just more, and again, I could be completely wrong. It's really a partnership. When you invest in a company and when the company accepts funding from you, as a startup founder, you shouldn't take money from any VC that wants to give it to you. You're looking at ideally a 10-year fund life. It's a long time. It's a very, very long time. You got to figure out, do I want to work with this person for 10 years? So the third thing I look for is, do the founders seem like the three things I always look for: integrity, morals, and a lot of ambition? Do they have all three of those? How are they answering these questions? Are they more transparent? Are they guarded? Can I do reference checks? Have people left the team? Previous companies and whatnot. How do they treat their current investors? What are their thoughts on things? And I try to get a feel of the person as a whole. I know that's not a foolproof model by any means. There have been founders that maybe are not the greatest people that have done exceptionally well, but it's one thing that I like to think about as well when I'm looking at a startup is, can we at least work with them for 10 years?
I know you talked a bit about how to break into VC. Could you talk about how maybe young people, college students, can break into VC in 6 months?
The greatest advice to become a VC is to act like you are one before you actually break it. So act like you're a VC before you're really a VC. And I'll tell you what I mean by that. If I really had to break it down into let me think about it. If I had to break it down into 6 months, first, just know it's not going to happen in 6 months. Most likely to take much longer than that, but don't be discouraged. It could take a very, very long period of time. Um, but if I had to give an example in 6 months, I'd say it's as follows. I'd spend month one and month two running around at different events, meeting as many people as I possibly can, writing notes about the VCs that I meet, writing notes about the founders that I meet, understanding the industry, doing all my research, and just figuring out what's venture like today, what's allocation like today, what's the market like, different verticals that I enjoy. I'll read more about those. I can speak to the founders there, and I just build my network that way. And I start connecting people, right? Oh, talk to this person, talk to that person, or oh, what are your thoughts on this? Just get to know people for 1 or 2 months, and on the back end, do your research. Months 2 and 3, I would carry forward with what months 3 and 4, I'd carry forward with exactly what I'm doing, but I'd add another layer to it. And what I'd add is, now when I meet a founder and I know what they're doing, I also know the VCs and I know what they're investing in. So I'd think, oh my God, I can't make any promises, but would you mind sending over some information? It could be a blurb, and I'd love to share this with a VC friend of mine. They may be interested in the meeting. Like, is that okay? Almost everyone will always say yes. They're probably not going to doubt you, no matter how young you are, even if you're in college or whatever. Like your best friend's dad might be the head of Sequoia, right? People have no idea. So I'd go to them and I'd start saying that. I'd meet the founders, I'd build a relationship with them, and as I learn more about their companies, if it fits the thesis, or at least I think it does, there's some VC that I know, I'm gonna ask them if they can send over some information, and I can share that. And if I can share that, and my VC friend ends up saying yes, you of course make the connection. Now, what I'll add to that, and this was goes into months, what are we in, 5 and 6? In months 5 and 6, I would make a memo to send to the VCs every time when it comes to investing. I would make connections for months 3 and 4 and say, talk to XYZ, or here's a company that I just came into contact with. Let me know if it fits your thesis. Happy to make an intro. And then you just make the intro from there. You're building your network that way. You're building relationships that way. It's everything we talked about, right? 30, 40 minutes ago. Months 5 and 6, when I'm sending messages to VCs, I would actually make it in a memo format. Now I've done my research on venture. I know what VCs are looking for. I have a founder network. I have a VC network. So I'm making that intro. I'm sending them, a blurb on the company. This is what they do. So they read it quick. They're not going to read a 2-page memo. We get so many deals that come across our desk. Just make it fast, right? It's going to be a paragraph or two really quick. I would say, here's what the company does. Here's why I think they're great for your firm. And it shows that I have a great understanding of your firm. I know what your investment thesis is. I know why you'd like this deal. And then I'd also attach a quick memo for them. And that memo would include anything else that a deal flow memo would have. It could be the market size, it could be the revenue traction, it could be all this stuff. You can find that information on Google on what an investment memo should look like. Nothing crazy, it could just be a page long. Now, that VC, what you need to realize is when VCs hire, most time it's always in network. We're not going to find it on LinkedIn. You're not going to find it on their company websites. A lot of times it's in network, and it's going to be people top of mind. So let's say your name is Jessica, for example. If Jessica continues to send Mehron great deals that fit his investment thesis, and we maybe invested in 1 or 2 of them, I also now know how Jessica thinks because I see her investment memos. And I think, oh my God, not only does Jessica have deal flow, Jessica understands how our firm thinks. She knows what we like. I should give her a real shot. I should give them a real shot and bring them in. So when I'm looking to hire, if we raise a new fund or whatever, you'll be top of mind. And that's a pretty good way to land into ventures. So you act like you're a VC already. To sum it all up, you understand the space, you meet founders, you meet VCs, you introduce people to each other and make contacts and connections, connect others. And then with the VCs, when you're sending them a deal, don't just send them the deck and say, take a look at this. Send them why you think it's a good deal for them and have a little memo attached to that as well. So you can be top of mind with that individual if they're ever looking to hire. That's how I would do it in 6 months. Probably the best way to do it.
Yeah, and it's like the small steps of really building that relationship early on. And then once you build that relationship, you're in the network. And once you're in the network, when they actually hire, you would be the first one, or maybe even like just a couple of people to hire because VC is kind of a mystery in a way where people keep it private of who they're hiring. It's just their network. Is there any lingering thoughts or anything you just want to summarize that we haven't talked about yet?
No, I'd say the biggest thing is really just get out there and meet people. That's it. Get out there, meet people, and figure out how you can introduce people to each other. You have to love the game. If your idea is to make money, there are 10 other ways I can tell you top of mind to make more money and do it faster and do it better. You need to love the game, and you have to be willing to do it for quite a long time.
Yeah, and it's a way of life. That was amazing, Miran. For anyone listening who wants to learn more about you or your firm, where is the best place to reach you?
You can find me on LinkedIn. It's my name, Mehron Sharq. So just find Mehron Sharq on LinkedIn and you can see me there.
Awesome, and I'll put that in the description. Thank you again, and thanks to everyone who's listening. Comment a question you want to hear from our next guest. If you enjoyed this episode, make sure to press the subscribe button, like, and share with someone who's interested in getting into venture. We'll see you next time on Break Into VC.
Thanks so much, Joe.